All right, welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates here on YouTube. In this show, we are going to talk to you about what's happening in the markets and how we are trading it. Today is Thursday, December 15th, and yesterday was the big day. The Fed raised interest rates half a percentage point to its highest level in 15 years, and the markets didn't like this. Stocks dropped after the news. The S&P were closing below 4,000. So what's happening today? And most importantly, how are we trading these markets? By the way, if this is your first time here, I'm Markus Heitkoetter. That super smart guy over there is my head coach, Mark Hodge. And we're real traders who trade live accounts. So therefore, we got a lot of trading experience, and we're showing you how we trade these crazy markets. So trust me, we know our stuff, and we're not afraid to tell you like it is. So if you're looking for some honest insights into the fascinating world of trading, you are in the right place. And boy, what a day yesterday. We have been waiting for this, for the last few days, and then the Fed statement was released.
It was, Marcus, and that 50 basis point hike did occur. I think the seventh increase? Now they've added 4.25 points after 7 hikes, and yeah, I mean, it was expected. You see here, highest level in 15 years. Some volatility yesterday because of the news.
Absolutely. We have to take a look at a 5-minute chart, and we've been talking about it. Typically, there are 3 reactions. The first one is the initial reaction when the Fed funds are released, when the statement is released. And at first, markets were moving lower. Then Fed Chief Powell was giving his press conference, and markets moved higher again, then lower. I mean, overall, yesterday, all things considering, I mean, markets were down less than 1%. But it was very clear that they didn't like what Powell had to say.
Exactly. I mean, you see that volatility there on the 5-minute chart, but at the end of the day, when the dust had settled, it didn't seem like it was that bad. We were lower, but as far as how the markets can respond to a Fed press conference and a Fed day, it really wasn't too notable. Although we're seeing a little more follow through this morning, and we did say that there are typically 3 reactions to a Fed statement.
I must say, I'm very, very surprised that right now the markets are down, and they're down much in a much bigger fashion than yesterday. I mean,
Yeah.
the Dow is down 2%, the S&P is down 2%, the Nasdaq is down 2.5%. And honestly, so what did Powell say yesterday? Let's just talk about this for a moment.
With what he said, it seemed to reiterate what he's always said. And the 50 basis point was priced in, and that's what they did. So no surprise there. But I think that what traders are really actually thinking about now at this point is that they did decide or indicated that they will take the Fed funds rate to a higher terminal rate above 5%. And also, he essentially said that Fed projections don't include a rate cut in 2023. Now, probabilities are saying otherwise. Traders are saying, we don't know what the Fed's saying, but or we don't believe what the Fed's saying. But that's what was said.
And that's super interesting because in the last meeting, in the November meeting, he did not talk about the terminal rate at all, which means how far will they raise interest rates. Before that, he said, I think it was 4.7% or something like this in the September meeting. In the last meeting, he stayed away from this. Yesterday, he said, well, it's probably 5.1%. But right now, if you look at what traders are factoring in, they say, nah, we don't believe you. We don't believe you. We think it's closer to the 4.8 that you said previously. And I find that super interesting.
And traders, based on probabilities, are expecting a rate cut in in November, and then another one in December. And the Fed, based on their projections, are basically saying we don't see that happening.
Yeah. Also, the next rate hike, which is occurring in the February meeting, 1st of February, traders are right now factoring in that it's only raising it by 0.25% or 25 basis points. So this is super interesting. And that's what we said yesterday, because Powell doesn't want the markets right now to rally and kind of think, oh, it's over, it's all good. He wants a softer jobs market. He wants companies to be fearful and fire people. That's what he wants. And this is why yesterday he put just cold water on these expectations that, hey, we're out of the woods. Inflation is under control. And I mean, this was pretty predictable. We talked about this yesterday.
Yeah, and what a difference a couple of years makes, because in general, the Fed wants an efficient job market and low unemployment and just strong numbers there. But higher wage growth is really, really hurting the impact of these rate cuts. So at this point, and I think that ties into the other concern, is it's the R word, the recession, right? Everybody wants a soft landing, and even if you expect it, people want it to be not that big of a deal. But at this point, there's concerns that it will be a bigger issue.
Yeah, and then this morning we had already a bunch of economic reports that basically showing the economy is slowing down. Core retail sales were released, came in worse than expected. The Empire State Manufacturing Index, worse than expected. The Philly Fed Manufacturing Index, worse than expected. So this all is indicating, okay, the economy is slowing down. I think especially core retail sales. It's kind of good news because you want customers to stop spending, stop buying, stop creating so much demand.
And then you have unemployment claims at 211, so 211,000 new filers of unemployment last week versus the 230 expectation. So again, here we see a scenario where high unemployment actually would be good with what the Fed wants to do inflation-wise, but slowing economy and still jobs being out there and pretty solid isn't helping.
Yeah, although I must honestly say, Mark, I think that this was an excuse from Powell yesterday because he couldn't say,
Yeah.
well, we don't have enough signals from CPI data because now we do have enough signals from from the PCE index, the Fed's favorite inflation gauge, and the CPI data. So I kind of feel he had to grasp straws yesterday, and this is why he turned to the labor market, because that's what we had a couple of weeks ago, that we still see a strong labor market. So for me, it almost seems like that was kind of an excuse.
Yeah, and again, I don't think he wants to come out and say everything's going great, even if he's feeling like in a couple of months things will be okay, because he wants people to be a little afraid.
Exactly. And afraid they are today. It's also super interesting, though, that yesterday the VIX, the fear index, was falling. The markets were falling and the fear index was falling just because now the uncertainty is out of the markets. Today, it is rising again, but we are still at fairly low levels. We're in the low 20s here. So there's not really a lot of fear in the markets just yet.
Not quite yet. That I with the reaction. Well, let's put it this way: this reaction, we were going to have a reaction, right?
Right.
But then the news is out. The news is out. And so that's why, both of us thought, even if there's a negative reaction after the statement and the press conference, you might get a rally the next day. So when we have the news, the uncertainty out of the way, normally you see things calm down. That's not the case. But even with this 5% increase in the VIX, it's still in these lower ranges, right? It's not reacting as though we have a 2% sell off right now.
Yeah. All right, before we look at our positions, we have to talk about our bet. I'm betting that by the end of the year, or I did place the bet way back here in the beginning of October, that by the end of the year, we will be above 4,200. And it looked pretty good for me for the past couple of days. But now that the Grinch Powell is stealing the Christmas rally here, a ways to go.
Marcus, I'm a ribeye guy, but I hope you have my tomahawk steaks ordered and ready to go.
Hey. It's not over yet. It's not over yet. I agree. Right now, it's a bit less likely. We need to see if the 3,900 level in the S&P today acts as support and if the markets are turning around. Because again, uncertainty is out of the market. Now we know what Powell is thinking. The next Fed meeting is in the beginning of February. The next jobs report is in January. We do have the PCE index released next week, so that's another inflation gauge. But I think at this point, especially with the CPI data, everybody's expecting that to show a slowing inflation. But even with this is where Powell said, well, 6% is still 3 times as high as 2%. Well, yeah, no. So let's see if traders, maybe at some point today, markets will turn around, or if they shake it off tomorrow and we will start our Santa Claus rally. We should talk about the Santa Claus rally tomorrow. What do you think?
Yeah, I think, because there are some patterns and some things that traders expect at the end of the year typically, and we should definitely review that. But yeah, no, Marcus, I think that the call at 4,200 was an awesome call, and you did a good job calling it when you did. Who knows? Who knows? But that ribeye with the big bone, I'll take a couple of those. Make it two.
We shall see. We shall see. The year is not over yet. We have 15 calendar days. I don't even know how many trading days because we are closed the day after Christmas on December 26th. And we'll see. Okay, anyhow, let's talk about our positions. So let's start with CTRA, a position that we entered last week. Sold the 26 put expiring. We did get assigned, and we were able to sell the 26 calls on Monday. Right now, today, CTRA is bucking the trend up 1% here. So we'll see.
Yeah, not too bad. We've collected some decent premium. This is a good dividend-paying stock if we're in it that long. So far holding up, and like the trade when I put it on, and working out just like I'd expect.
Yeah, so I mean, I wouldn't mind if this moves higher again tomorrow, but remains below 26. This way, our calls just expire worthless. We are not getting called away. And if we are close to the 26 level, we might be able to sell some more calls on Monday and collect more premium.
Sounds good.
Let's see. Google. So Google dropping today. I mean, down 4%. I mean, same as with Nvidia here. Tech stocks today are getting hammered. So we'll see where Google finds support. So I was assigned at 108. You assigned at 104. Not yet being able to sell calls. I mean, you were able to sell some calls when it was getting close to 100. No, you did last week, I believe, right?
Yeah, it was close. It was close early this week, but enough for my 30% annualized. So yeah, kind of in that downside of this recent range. Hey, so goes trading sometimes, but I'm comfortable holding Google for sure.
Yeah. All right. Nvidia. This will be super interesting. My cost basis 160.91. So right now still trading above my cost basis, but I did sell 175 calls expiring tomorrow. And a few days ago, it looked like I would get called away tomorrow. Right now, I mean, also Nvidia today down, 5% for the day. So unless we see a rally, I will still be Nvidia. We'll be able to sell more calls next week. Haven't decided yet at what level. Depends on where we are on Monday. If I'm going down to the 170 or if I can sell the 175 calls. So that is so interesting. What a difference 2 days make from, oh yeah, it looks like it was a mistake. I should have sold calls at a higher price to, oh, these actually might expire worthless.
Yeah, I think that's why, well, that's why I love the 175, because you got almost $5. You did get $5.
Yeah, I did.
Right? I mean, so that's bringing down your break even another $5. That's huge. Gives you some flexibility here. Even if the stock's down, you're doing great on the trade, and you have a few different options that you can take.
Yeah, for sure. And then we also have Play. So Play moving lower today, but I sold the 32 put expiring tomorrow. You have the 31 put expiring tomorrow. We've not been able to close this trade because we like to take 90% of the max profits here. So this is still open, but I mean, unless something dramatic happens today and tomorrow, seems that this expires worthless, and then we can look for more positions next week.
Exactly, looking good.
So that's where we stand. Well, one stock that I want to bring up that seems to be bucking the trend today is Tesla. After being down. Today, Slightly up, and that's surprising based on the news that we got from Tesla.
Yeah, I'm surprised. There you have the headline. Elon Musk sells another huge chunk of Tesla shares. He sold more than $3.5 billion worth of Tesla stock this week, and a second time that he sold stock since buying Twitter. And pre-market, the stock was down 2.5, 3%, and a little bit of a reversal there during the trading session.
Yeah, so now we see that Tesla is up. Can they remain up today? Can they actually slide out of the downtrend that we see here? That is not a stock that we want to sell puts on because right now it is still, it seems, in free fall.
Yeah, and this is where it's good as a trader not to get married to a stock at times. We were watching this one. It started to, people started asking about it when it was trading at $200 a share, right? But that slide, that sharp reversal, and just the news in September, the uncertainty, um, just didn't really fit our perfect wheel candidate scenario. So we passed on it, and I'm happy I wasn't a buyer at 220.
Oh, absolutely, absolutely. You would regret this today. Anyhow, talking about stocks and how we select the stocks and why Tesla wasn't on our list here of stocks to trade, we did a video that show you how we select the stocks for the wheel strategy. So take a look at this, and then we'll see you again tomorrow.
Happy trading, everybody.